Welcome to another episode of the Backholder Pod. So I think we have just concluded the December BTO exercise. For those of you who don't know, just some context. The BTO scheme, which is the build to order scheme for HDB flats, usually I think it runs 4 times per year, and that's where all the Singaporeans come together to bid for essentially a placing, to select their upcoming flats that will be built within the next 3 to 5 years. So I think as we just concluded this recent exercise, I just wanted to cite some numbers. So there are some still quite affordable housing options. I think in more non-matured estate, they have a 3 room flat starting around 250,000 and 4 room flat starting around 320,000. However, on the flip side, in some other matured areas, there is even 4 room flat going for between the price range of 500 to 700 over $1,000 for a BTO flat. So I think in this pod specifically, we just wanted to discuss the state of the housing today in Singapore and whether it's affordable or not. And it seems like there are many people complaining about the cost of living in Singapore. And that's why I just wanted to ask Kelvin, do you think $700,000 for a 4 room BTO flat, is that supposed to be affordable in current context?
Put in context lah, 700,000 is definitely in prime location lah. So if you are someone who have just graduated, there's no way you can afford this kind of BTO, unless you are a scholar like Eric and Bunti. You must always go back to what you can afford, right? If you are earning like $4,000-5,000 kind of salary, then just go for the kind of house that you can afford lah, like 5,000, 500,000 kind of BTO lah. Why would you want to spend more money just to stay in the prime location? I think it's what the Red Hill, right? Is somewhere there, prime location. So like, okay, you can save more money, but is the food at Red Hill cheaper? So even if you buy an expensive house, you are going to spend more money on food. Then okay, like, that's the convenience part. But how much time can you actually save? So let's say if I stay in Tampines, go to the town area is about 30 minutes. If you stay in Red Hill, it's about how much? 15 minutes. So you're paying about extra 200K just to stay 15 minutes of your traveling time to the city. Is that worth it? I have no idea. Why not just save the extra 200K first? Then when you are richer in the future, then just move towards Red Hill lah. There's nothing wrong with that, but yeah. So that's my take lah.
Well, I'm checking the locations of those like the prime locations. I think just now you quoted 700,000 for 4 rooms, right? Actually, if you think about it, let's say if you view it from someone who is like really like new to BTO, you just graduated like less than 3 years, it looks like super expensive. So 700K, I don't think many people can afford that if you are working less than few years, right? But if you just look ahead for like, let's say like longer than 5 years, like with the horizon of let's say 10 years, right? I think there's always this premium attached to the prime locations, and this, looking at the map, I think it's really like mature estate prime locations, and you can compare the the HDB prices around the area is also not cheap, right? So and I think that area, the one that near Bukit Merah, Red Hill, right? I think there isn't much HDB in those area, so there are quite a number of condo. So you can compare whether you want to stay at 700,000 HDB or fork out 2 to 3 millions to stay in condo. I think it's still a very affordable prices lah. But bear in mind that that's the premium that you paid for the locations, and locations, there's always this saving component in there, meaning that whenever you need to sell or you want to sell or move to larger units, right? You can always sell this premium to someone else because people will value the locations. So I think it's reasonable. But if you ask me, like if someone who is just graduated 2 years and now want to bid for 700K, I think that's like too much for the stage that the person is in.
Actually, it's quite interesting. Both Kelvin and Bunti have the same conclusion. But if I can share anecdotal stories, actually, my friends around me, they're all going for that 700,000 uh, BTO. I don't know why. I've conversed with them about it. Actually, I think all things considered, they can afford it, but it will be a very big stretch. This This I can attest to it. As in they crunched their financial numbers. But the context is, of course, both of them are uni grads, and if you do a quick search, their income, you add them up, they are not qualified for any grant. So they are probably earning at least 9 to 10K combined income, more than 9 to 10. So that's why they are all the first house they go, they buy.
Wait, is that a fresh grad?
Yeah, fresh grad.
Wow, 9 to 10K? 20.
Combined income
Wow. Or combined income.
Combined income,
Oh,
combined
okay,
income.
okay.
Yeah. Correct lah. 4.5 add up 9K
吓到
lah.
我一下子. I thought
Why?
now the kids
You thought
also wish to
inflation so high. Nowadays, fresh grad 9K, 10K already.
almost wanted to make a
Actually,
new video already.
To be honest, actually there are a lot of jobs that are paying 9 to 10K also. Those that are in fund management, investment banking, they're all paying 8, 9K.
But it's the minority lah, like maybe 5% of the entire cohort.
I don't know. I don't have the numbers at the top of my head. But actually you can see the GS, the Graduate Employment Survey. If I'm not wrong, the top 25th percentile, there are at least 6 to 7, 6 plus 7, top 25%. So it's not even like 5%. So actually, I don't think it's as rare a Pokemon, or it's not as unicorn as you think. But of course, you can't benchmark that as the average lah. But anyway, back to my story. What I'm saying is I would say most. I know at least five couples. Not this round lah. They've applied last year or 2 years ago. So they went through the deferment income scheme because they are still studying. They were all taking up this kind of they're all taking 4-room flat, and they all take the highest floor. So that's why the indicative price is the highest. And they're paying like 680, 700, 720, 740. Then I'm like, how you guys have so much money? Then they started counting for me to see. Okay, now our combined income is, let's say, 9, 10K. They can contribute to the CPF ordinary account. The building takes 5 years to build. So within that 5 years, they can amass around 100 plus thousand in ordinary account already. Within before the flat's even built. Then they need to fork out another 100K, I think 50 or 100K in cash, so that they pay the down payment. So in terms of at least the first part, they can fulfill because they can amass that 20% down payment. And then they did their own calculations of mortgage and then do some projection of their income going up for next 5 years. Then just nice. But I think the biggest worry here, or the downside, is that it's stretched, meaning it's all gang hao. They need to hit that salary increment. They need to make sure they save up in the next 5 years. They need to make sure that they don't anyhow spend. So if you introduce spending, you introduce kids and whatever, then the plans might need to be readjusted again. But I'm just saying, all things considered, actually I do have quite a few friends that are in this kind of mega projects that are in prime area, and they're forking out crazy amount of money, which I don't know why.
What happened if they, let's say 5 years down the road, they realize that they don't have, they don't save enough money to buy? What will happen?
You can, I believe you already paid the 5% down payment already. So I believe you need to forfeit it after 5 years later. But don't worry lah. I think most Singaporeans now, or at least the people around me, they have something called the father-mother scholarship lah. Anything else, they can unlock a great deal of cash flow. 100, 200,000, I think no problem lah, for most for the more affluent Singaporeans. So don't need to scared for them. They got backup plan also.
Yeah, I think that's exactly the point that I want to raise, is that, let's say you go and tell your parents, right? You say, okay, Alibaba, you see the price so cheap. Alibaba so cheap. I want to whack into Alibaba. Can you lend me like 200K? I think probably the reaction that you will get from your parents is like, no man, right? But let's say you say, okay lah, you see, I already save up like, let's say 200K. I need another 200K, whatever numbers, right? You just ask the parents. Unless the parents really don't have the cash around, but as long as they have the cash, right, I think for house payment they will definitely support one, right? So I think this backup plan is solid, right? So, but that help you secure the prime locations, and come with the forced saving also, right? Throughout these 4 or 5 years, I think that's a good plan, Like, let's say if my children want to do this, right, I'm okay, I'm supportive,
I have an issue though. So I think the mindset going into all these BTOs, right, it's not really to say I want to build a family or what. Because if there really is an urgency, they wouldn't wait for some of this building time is really very long, 4, 5, sometimes like, I don't know, 60 months or something, 60 plus months. So the perspective really is not that. But coming from an investment perspective, which is why there's so much activity and speculation, and that's why the government is also clamping down with all the cooling measures. But I think the general temperature now is very simple. I buy into this 700,000, I whack first. 10 years later, if I can sell, confirm 1.4 million. You get that's the logic they go in when they go into all this BTO. It's not really I want to build a family, I need a house to stay and whatever. You get what I mean?
Yeah, but
So I think
It's
that's
a
the
lottery
more
scheme, right? In a way, right?
yeah, so that's why they introduce all the clawback and what. But it's still there's still the element of I go in, I need 1.4 million. If not, I won't come out. You get what I mean?
yeah, I get what you mean, but it's just that if you look at the locations, right, you try to understand the characteristics of that project, right? 700K, I think is reasonable. It's not that crazy, you know. It's not like really or housing in don't know ulu places, right? Then last time used to be, let's say 2 years ago, 3 years ago, used to be like 200K. Now suddenly 600K. That kind of like crazy. Even sheets also go up kind of situation. Now it's like really this is prime locations. I think you need to give that. There's a value attached to that now. 1.4 millions, I think no problem lah. 10 years later.
But after you sell your house, you still need to buy another house to stay back in, right? So let's say you profit this much.
No,
Their plan
usually
is they
people
move.
upgrade.
They
Yeah,
move.
upgrade.
Okay, so there
Yeah,
are two.
so in the end, you are still locking up the money after you have sold, right? So what is the investment part about? Like, let's say if I buy an antique, right? I buy a wooden sculpture of Punti, put in my house. It looks very nice, lah. It's an investment. But if I'm not going to sell and realize the profit, right? It's not an investment. It's just a placeholder in my house. It's a white elephant, lah. So I feel like all this house, right? You buy so expensive, you earn so much money, but it's all going to go back into the next house. And must give you let's give you a profit 100K, 200K. But it's not much different from what let's say if I stay in Tampines, I save that 200K and I invest over 10 years. So in the end, the profit is about the same. It's just that you are staying in a more expensive place. No?
Yeah. My friend actually did this and then he also shared with me like, okay, this is the game plan for this type of like investment. So basically they BTO like Chicken's friend like BTO 700K, and then maybe 7 years, 10 years later, cash out 1.4 million and throw that 1.4 million into another condo. Let's say condo by then will be like 4 millions, right? But let's say if you start from zero, you straight away want to buy 4 million, 5 million condo, where do you get the down payments, right? So it's always through like, you know, every 5 to 10 years you upgrade once, and then you always move your so-called the home equity to another bigger, higher price unit. And those higher price unit will still continue to appreciate in price, and that's how you build your home equity and your net worth. But the problem with this strategy is that you will be very, how to say, balance sheet, you are very rich, but cash flow wise, depending on how you utilize your assets, could be quite tough. Like you don't receive cash flow unless you really rent it out, right? So that's the problem. Yeah.
Yeah, and don't forget a lot about this whole asset progression model. They say you keep upgrading, right? Then there will come a point in time where you retire and you can't afford the loan anymore, right? That's when a lot of all these people that stay in prime, they'll move over to Tampines with you, lor. Then they will downgrade.
They downgrade,
they
then cash out.
They move out, they cash out, they move out, lor. Then they move to your area, lor. Then they drive up your property price as well because they got a lot of cash now. I got 1.4 billion. Then I come my Punggol, I go Sengkang, I go Woodlands to go and push up, pump up your property price.
Actually, is that Eric's plan, right? Right now he's staying in resale, right? Then he's going to move to condo. Then after 5-10 years, are you going to upgrade to another bigger condo? Then after 20 years, you're going to come back to Tampines HDB again.
I think start of this year I was saying like looking for condo and all that, right? But because of the way that the price has panned out, right? We feel that it's a very big stretch. Like I think Chicken was sharing his friends playing the BTO game, right? Because they are studying or just graduated. But I think there's also a lot of fresh grad playing the condo game. Like they use their father-mother scholarship straight away. Straight away, Pama, I want to whack this 1.7 million condo, 3-bedroom, OCR. Let's do it. Then the parents, like Bunti, will say, of course, so cheap. Let me give you a bit more. Go for the RCR. Okay, so they whack, right? That's why you see the condo prices are like going nuts, bananas. You go for those new one, right? 3-bedroom, good location. You can't run away from 2 million. In fact, 2 million was there like I think 2-3 years ago. You know the Bedok Point? The Frasers redevelop it and then become a condo, right? It's a small condo, I think couple of 100 units only. They already selling 2 million 2-3 years back. Then we were like, siao condo 2 million in this kind of OCR. Then fast forward 2 years later, everybody's selling for 2 million, 3 bedroom lah, OCR. So it's like, I think there's a reason why people think this way, because for the past like 30 years, 40 years even in Singapore, when you buy a property, right, 10 years, 15 years down the road, right, is almost like most of the property will at least appreciate about 80 to 100%. That's why even banks feel that they are okay to lend you massive amount of money, because it's in Singapore, this is quite a so-called very low risk bet, even for the banks. So they don't mind giving you a 3.5, 3.7 loan, where the federal interest rate is like 5.25. They're giving you 3.5, 3.7.
Like different currency,
Whatever lah, but you just check out the interest rate, they deem it as okay, it's less risky, because the flat itself is a collateral, which is over the long term, they see that this asset class quite steady, so they don't mind taking that risk with you, and then they earn a lower interest. So I think there's a reason. It's also because the political landscape here very stable, land scarce Singapore. So all these things, like I can see why the fresh grad like Chiking, they all whack the biggest. In fact, Chiking, I think you should also whack the biggest.
That's what he did, right?
No, I didn't.
Yeah, just whack the most mature. Look at the estate. Which one most mature one? Whack that one. Whack the
Yes.
biggest one.
Take out a
No
1
need-
million loan.
Straight
I
away
scared
whack
though.
the most expensive one.
Do it.
That one-
Do it.
Take a $1 million
Bastard,
loan.
whatever.
What's the alternative thinking? Are you going to either put more money into house or put more money into Alibaba, right? Which is better?
No, I think the housing thing it's a natural conversation if you need to build a family. It's just that what's the choices here you have, and how are you gonna allocate capital only? Because to me now, when I look at it, assuming that we don't rely on our parents and what really just based on our own income potential and whatnot, and you make your own assessment. And at least based on how my friends have explained it to me when they draw out their roadmap, it feels very stretched, meaning one of them cannot lose their income. If one of them lose it for at least 6 months or 1 year, there goes. Then they need to start activating their scholarship already. If not, then that'll be very tight. That's one point. And I think on the second point, we have seen a lot of people saying that maybe the housing market has been on a momentary peak, saying that the market has peaked. But I think the funny thing is when you look at a lot of all this let's talk about BTO only. I don't comment on condos or landed or other housing. So if we look at BTO only, so in the previous exercise, when we look at prime location housing, they recently introduced this new measure called the clawback scheme. So what they do, the HDB idea is very simple. They give you prime location housing, they whack big load of subsidy, which is what Bunti say. I was looking around. The similar 4-room flat can be selling at 1 million now in the vicinity, 800 to 1 million. But they sell you only 600,000-700,000. So they give you a huge subsidy already. But then they try to do in finance they call it back end load. So there's one called front end load, one is back end load. Back end load meaning when you exit, you need to give me a commission or a charge. So in the previous cycle, they actually give a 6% clawback. This time around, the December one, they do a 8% clawback. I foresee following on, they will keep giving 10%, 12%, 15%. Why? Because the subsidy they'll keep adding on more and more to make the housing more affordable. But then they want to reduce this lottery effect, so they do a back end clawback later on.
Sorry,
So
checking the 8% clawback. How do you calculate? Is it like any
higher
appreciation
of-
above
no
above
higher
8%
of
you need to pay?
higher of the valuation or the resale price. So you sell how much? Like let's say you sell 1.4 million, I'll claw back
Okay.
8% of your 1.4 million.
Wow,
You
smart
sell
leh.
next time you sell 2 million, I claw back 2 million. I don't care. I claw back 8% of your 2 million. Whatever
It's still a small amount, right? The 8% of 2 million.
because they are just starting out this planning.
Okay.
Sooner or later, after when the subsidies keep kicking in, they can keep
Uh-huh.
increasing. This number is liquid. It's not
So you don't know,
fixed.
even let's say if you successfully bid for a unit now, you don't know what is the percentage that they
No,
will
they
call
will
back.
tell you. They tell you upfront is 8%.
Okay.
But I'm just
But
saying
for
newer.
future projects,
Yeah, future
okay,
because
got it.
they have the trend is increasing. So it's 6% the previous round, then now it's 8%. So presuming if you follow this trajectory, next project or two more projects later, maybe 10%. I don't know what's the number lah, but they have their own evaluation metric lah.
I think
this
even
one is like
20% isn't that high, you know. Even if they go to 20%, it's not high.
This
Because
clawback thing is quite new, right? It's about like 2 years ago.
Within the last 1 or 2 years lah.
Sure.
Yeah.
this is like stellar stamp duty, right? For the private.
Yeah.
So
But
the
now it's
idea is the
because
same.
they're clawing back subsidies. But I have one more interesting discussion I wanted to bring to the table. A lot of people think that, oh, yes, this is a stopgap measure to prevent the lottery effect, right? Because I'm taxing a percentage of your profits, right? But then if you look at it from the other perspective, it means that the incentive with the government now is aligned. The government wouldn't want to crash the property market as well. Because why would they would at least hold it? Because that would also means that my revenue or my taxes will be increasing, right? If my property price is staying stagnant, and a lot of all these properties 15 years later will exit, and I'm clawing back 8% in terms of the price appreciation.
yeah, but I think this clawback will it change their so-called their KPI, right? I don't think so, because all this is still like a very small percentage of the entire HDB market, right? And for sure, the government don't want the HDB market prices to collapse. This one, if the market collapse, nobody happy. It's just like stock market, you know. Stock market rate down by 30% over the year. Every shareholders they are, you know, they are sad. Even the short seller also looks very gloomy. But then but comes to housing is the same, because we want a stable price. We don't like it to skyrocket, because there will be still new buyers that want to buy, right? But going down is definitely not something that they can tolerate lah. So a stable prices is what they try to aim for lah. It's like the inflations, right? They try to target 2%. Nobody say want to target the deflations of negative, you know.
Right. So if
Yeah.
if you really think about it, right? So now let's say I'm the middle, I'm considered the sandwich between the three of them and their kids. So right now I'm facing with $700,000 property price at 4-room flat, prime area. So I will presume that within the next 15 years, when all your kids grow up to my age, 15 to 20 years, 15 years, give or take, meaning that I'll presume there'll be another round of uplift in the property price, and BTO next time will probably be $1 million. Now we are saying resale flat. Wow, $1 million. Siao. Next time will be BTO $1 million. First time? You get what I mean? So then it comes back to the perspective that how are you feeling with this entire situation, Eric? Will you be the next time if BTO also need to take parent scholarship, you will be likely and willing to fork out as well? If Felix asks you, Papa, I need to buy faster secure this $1 million BTO.
I think definitely I will assist since I don't know, we have this plan, right? Like maybe ask my son. This one I don't know whether he agreed, his future wife will agree. He just asked him to buy a very big BTO, right? Like 5-room, right? Then one of the room we stay lah. Then we rent out our own.
Confirm
this
cannot.
one
This
cannot.
one confirm cannot.
Huh? Don't know lah. Like if can shock man. Passive income. Well, I rent out my own HDB, and then I stay in one of his room. Wow,
Actually,
everything.
you don't have to, right? You can already rent out your house, then you go and rent a cheaper location house. You don't have to go and kacau them, right? I mean, the alternative plan still works, ma. I know people are doing this. They rent out the original HDB, then I go and rent another HDB.
So how does that work?
Let's say if you are staying at Red Hill, the Red Hill rents is higher, ma. Then you go and move back to Tampines, go and rent back your old house.
I see. So you go to a more
Kampong
ulu
area,
location,
Kampong area of Singapore, yeah.
Oh, okay. Yeah, that makes sense too. It's like a geo arbitrage, but
Yeah, you do arbitrage
within Singapore. Oh, the poor man's geo arbitrage. Rich man, they will go Bali or whatnot.
But Eric, definitely cannot stay together. You know, in Chinese saying, 一山不可长二虎. Cannot.
Then you just don't be the who lah, it just be the
No, the who is never you
It's your wife, right?
and his wife. And
okay, yes, that's true. That's true. Yeah, to
But I think also one more other factor to bring more color as well, because we keep talking about how housing is expensive, right? Um, I think generally actually Singaporeans do agree, at least based on the application rate. The funny thing is for the mature estate, which is this so-called prime areas, right? The application rate are all below one for first timer, meaning if the first timer family goes in and put the application in, they are more than guaranteed to get a ballot number, if I'm not wrong. They're all less than one, meaning the available housing flat, there are lesser people vying for it. So then these extra units will then be supplied to the second timers. But it's the non-matured estate, those places at like Woodlands or Bishan, that kind. Actually, Bishan is matured, but they're not considered prime lah. Those few areas, actually, you see the application rate really, really quite crazy. So for Woodlands, right, 4-room flat for first timers, it's 2.1, and 5-room flat 4.4. First timers are. Then Bishan, 3-room flat 1, 4-room flat 3.2. So these are the numbers you are working at. So clearly you can see that people are still, or at least a lot of people are still favoring the cheaper and the more affordable option rather than everybody flocking to this prime location housing. So a lot of all these are just discussions saying that, oh, BTO 700,000 so expensive. But it's not your normal every Tom, Dick, and Harry vying or trying to throw in the towel and say that, oh, I want the 700,000 HDB flat. So there's just some context as well.
There's still one thing that I don't understand. Why is Singaporeans so obsessed with all this upgrading? Like, like I don't see this happening in Malaysia, but in Singapore it's like, oh, I want to upgrade every 5 years. Oh, HDB, no, BTO.
I think I saw a
condo,
stats.
up, yeah, up.
I saw a stats, right? I've forgotten, was it from Georgetown or something? He did say that the percentage of equity ownership, right, amongst Chinese people or Asian people are very low because a lot of the money is stuck in property. So I think likewise, I've forgotten who said, was it Bunty or Eric? It's just naturally the view is it's a risk-free or low risk way. Sorry, cannot say risk-free. Low risk way of appreciating your balance sheet or improving your balance sheet to earn more money lah. They just see it as a very easy way to asset progress. I think. I'm not too sure whether.
So it's in the DNA of Chinese lah.
I guess you can
Yeah.
argue that way.
it's in the gene.
Yeah, plus when you see your friend get a condo and you stay in HDB, you're like a bit 心理不平衡, right? You feel a bit inadequate. Like let's say if Eric moves to a condo, they like, wow, then I tell my wife, wow, Eric moved to condo. Then she will like, yeah, maybe we should move to condo also. Then you move to condo, then all the like it's a rippling effect, right? So all the friends will start to, yeah, maybe we should all move to condo. We should upgrade also. All these high pricing cost issues are caused by Singaporeans. And it's also the same Singaporeans who are complaining about all these rising costs. So it's I don't know, a bit weird lah.
Caused by FOMO. Everyone FOMO.
It's a FOMO thing. Yes.
Yeah.
But I think the perception is that if you stay in a condo, right, there's better security. You have
Against what? Who is trying to rob you?
not say trying to rob you lah, like
It's a different story in Malaysia, you know. Like in Malaysia, okay, I dare not let my kids on the road because a car will come and knock him down. A guy will come in the van and try to kidnap my kid. But in Singapore, what are you protecting yourself against?
random xiao lang, no? There'll be
Like who? What's the occurrence? What's the chance of this happening?
chance of this happening. I don't know lah. That's why I say it's a perception perception that there's better security. Not any Tom, Dick, and Harry can go right up to your door and knock on your door. Hey, can you donate for charity? Can you buy this thing from me? Like I from the prison doing this for some. That actually happened to me quite a few times. So they kind of knock on my door, say, oh, can you help me, help the children, help the old folks, help the whatever lah, a lot of different variants. Whereas if you stay in a condo, there's no such issue lah. So nobody can like just randomly go in. Nobody can randomly put a lot of those kind of spam mails.
Actually, here's the other thing. Like people stay in condo for their facilities.
Also, yeah.
But how often will you use the facilities?
As far as I can see, right, not really there.
Yeah. Then I heard from my wife lah. She said that if you are swimming using the swimming pool lah, the people who are going to swim with you are all expats. Right? So you are going to see, not Singaporeans who are going to swim with you.
Yeah.
The one
Honestly,
I
I don't
think
know. It's
the
just
one I
for
think
perception.
depend on condo the breakdown of the people. If it's more 1 room, 2 room, 2 bedder, right? Then it's more expat and investment related. But if it's I think there are a few projects that are more 3 room, 4 room focused. Those are family, which is more Singaporeans lah. But I think generally we can agree that there is also this FOMO effect because as we keep seeing prices increase, then the younger ones will be thinking, what the heck? If I'm not even inside the game, if I don't even own a small piece of asset, let's not even talk about 4 room like prime area. Even if I don't own a 3 room BTO at like Woodlands or something, and then my house don't appreciate alongside, I'll be priced out next time. Meaning if I want to upgrade to a bigger place for a bigger family, I can't even do that because maybe my money in my CPF is not compounding fast enough. Or even equities, I don't know, you go and pick something like Alibaba and lose money. That's why you need to you need to be in the game in order to stay in the game. I don't know how do I put it
I feel
better.
it's flawed, right? Okay, the whole housing price rise together. So it's a relative thing. It's not like prime location is rising faster than some ulu place, right? They are all rising at the same pace. Probably a bit faster, like, but it's not as fast as you may think.
But I think Chicken point is that yes, everywhere is rising, but you cannot stay out together. You cannot say, "Oh, I just rent and wait for the price to come down." You have to at least hop on at least one. Could be cheaper one, could be more expensive one. Then rise along, like go along with the markets. And then when you have the money to upgrade, then you got upgrade again. So that's how to play the game. Instead of like just renting a place for 10 years, 15 years and hope for the property prices to come down, which never happens.
But what if it's not a rent? It's like staying in a HDB instead.
Okay,
Are you still in the game?
Can I just interject? I think to Chiking's point, right, and to address also Kelvin's point, right? Chiking said get my foot in the game, at least some game, maybe 2 room condo or whatever. Then Kelvin say, oh, Singaporeans can just stay out of the thing, what? Yes, okay. The thing is you can stay out, but if the market progresses up fast, right? Like what it's doing now, condo going up very fast, right? So HDB also going up, but not as fast as the condo. But if let's say you're saying that, oh, 我与世无争, I be a monk, zen about it, the condo and the prime HDB can go up to the moon. I don't care. I just stay in my Tampines 4 bedroom. I'm very happy. Okay, nothing to do with me, right? That's where I think there is a king in the logic lah, because all these prices, right, will cascade down to the rest of the economy. You see, the condo, if it goes up like crazy, right, for the past 2 years, it continues going up. That will affect what? That will affect rental valuation. So the people that are renting are the people that's providing other services. So if their cost of living go up from the rental, which is a knock-on effect from the valuation, then these people will raise all their services, the fees, right? Then who will get affected? Same. The people who are staying out of the game. So you cannot say like, oh, this asset class, let it chiong, I ignore it. I just zen about it. You still have to think through. You still have to think through like, okay, how this affects me, how can I roughly mitigate this? Like one way, like what Chicken say, is to at least get your feet in the door. Like don't stretch yourself too much. Go for the lower quantum. Like people who cannot afford a condo, right? 3 bedroom, you go for the 4 room HDB. Maybe in a mature estate and in a high floor. Then there's a little bit of like, okay, you can 对冲, you can hedge your, if the market goes really crazy, right? You have a little bit of appreciation there, you don't lose out that badly. That's the kind of mentality. I do understand where it's coming from. If you take a step back, right, from the start of the inflation thing, the very smart people, the secret lab, that fella, he already bought the lender already. So when that guy bought the landed, right, a few other high profile people also bought landed in like super prime area. So the people with foresight, I'm not one of them. The people with foresight, right, they look at this happening and they say, think about it. If inflation goes up, right, all this raw material goes up, what are some of the real assets, hard assets that we get that can actually go with the inflation rising. So these people thought ahead. They went for, like, in our vernacular, is like the highest HDB, the most mature one. To them is landed law in the prime district 9 law. That's why they came out in the news, ma. But they were thinking so far ahead, like, wow, inflation, then let's do this. And then there was like tens of millions. Yeah, so it cascaded down, like what they foresaw. I mean, nobody will point in 30 million if they weren't sure what is the effect, right? Would you? You earn like 30 million, would you plug into a good class bungalow?
I'll buy
Yes.
S&P 500.
If
Then make
you
a
bought
video
at the
about
start,
it.
if you bought at the
Also-
start, which is 2021, right? Actually, S&P 500. I'm not too sure. We need to do a comparison, right? On
I think
which
it
one
didn't went
appreciated.
up so much compared to the hard GCB.
Especially if you leverage as well, lah. Because
Yeah lor,
it's
plus the
good
lab.
leverage, lah.
So the best strategy. So we are talking about the best strategy lah. Is it just to go straight for the most expensive BTO? Or is it just go for normal BTO, then put the rest into stocks?
Or ask father, mother, and get straight into a 1.7 million condo.
Thinking, would your parents actually feel that is appropriate? Would they actually accept if you propose to them? Like, of course, you need to repay them lah, but would they even accept it?
I think will lah. Most Singaporean parents, if they have the capacity, they will lah. But it's more of a self-imposed. I wouldn't want to do it lah. I will do it myself lah. Yeah, because it's also your assessment, right, on where you think the housing market is. I'm very allergic to all-time high prices to a lot of things in life. That's my general philosophy lor. So that's why even if I'll go in, I wouldn't try to stretch lah. As in, I wouldn't say that, hey, can you give me a small loan of 250,000 and let me down pay something? I wouldn't do that lah.
For chicken, it's like 700K is expensive if it is all time high. If it goes to 2 million, then come back to 700K, then it's cheap. 对吧?
Which is what if a 3-bedroom condo now is at 700K, then I will leverage up and ask for 250,000.
No, let's say BTO, the BTO that you mentioned, 700K.
Mm.
But if the BTO 2 years ago was, let's say, 1.2 million, now come back down to 700K, then maybe you think it's okay to buy.
But
already.
would it overstretch my budget or not? That's the issue. Or you're telling me to get a
Will
loan?
Or
Get a
is
loan
it
from
already
my parents.
overstretched your budget? I don't know. about
700K is
budget.
definitely is stretching lah. Stretching to a normal fresh grad budget lah. Can do, but it'd be quite stressful. Like nobody can lose their job.
I was just thinking, if I were in your shoe, right, would I tap on my father-mother scholarship? I think my personality is quite similar. I don't really like to borrow if I can help it. But I'm just thinking, this generation of youth, right, it may be a little bit too much to ask of you for that quantum of amount for BTO. But I'm thinking, if I were in your shoe, right, I would tap. Not to buy condo, because condo itself, right, the maintenance fee is also a ongoing thing, right? So I don't want to do that, and we are very subjected to the interest rate kind of thing. So if I'm a fresh grad, right, I will most likely tap to buy the biggest, like 5-bedroom BTO, like mature estate, close to my parents obviously, matured, and then maybe like mid to high floor, closer to MRT, then easy to sell off or to rent out later on. So I will tap on them, but I will make sure I repay them like within 5 years. Once I got my key, I will repay them the money.
Does the repay include interest?
Okay, so normally, right, just for reference if let's say I borrow from my family, right, I would think a 10% interest with the repayment would be reasonable, because they are not going to harass me if I don't repay them. So if I break it up into like 5 years, right, then I pay them back 10% interest over the original. I think they will be okay with it. Means that every year works out to be simple interest 2%. Reasonable It's like, I borrow from my government kind of thing, so they also don't lose out too much. So yeah, my rationale is because the housing, past 50 years Singapore history, proven it has a proven track record. Yeah, so I would do it lah. I'm not sure whether Chiking would want to do it.
I think that's an interesting discussion. Do feel free to leave in the comments below on what you guys think and whether you guys will be leveraging on your own government's money or not. Yeah, with that, we'll see you guys in the next video. Goodbye.